The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Alistair McLeod, keeping you up to date with expert opinion on precious metals and the markets.
Hello, this is Alistair McLeod on behalf of Gold Money. And with me on the line from London, I have Tony Baird of the eponymous Baird & Co. Welcome to the podcast, Tony.
Thank you very much.
Now, you do everything really with the physical. You do investment bars, you do jewelry tools, wedding rings, and you buy in scrap and so on and so forth. I mean, how's business been on the scrap side over the last year? Are you finding that scrap supplies are still plentiful, or are they slowing down, or how's that going?
Well, I would say since the gold price has lapsed, the scrap flows have indeed quietened down quite a lot. I mean, we're still getting a fair volume, but I wouldn't say we were getting as much as we were getting at the peak. Possibly, scrap flows are down by about 25 to 30%, I should think, which is quite a drop. Yes,
that is quite a drop, isn't it? I mean, I don't know what the total scrap flows are in the UK, but I think UK, Europe, and America in 1 year is about 600 tons or so. Is it a fair statement to suggest that scrap flows would have declined not only in the UK but a similar amount in Western Europe and perhaps America? Have you any knowledge of that?
Oh yes, scrap is very price sensitive, and once the price has gone down, it does slow down everywhere. So it's not just the UK that has slowed. It will be worldwide, really.
Yeah. And is this also true for silver? Because, of course, the silver price is being knocked very, very hard over the last few months.
Well, silver seems like a slightly different animal. We haven't noticed the silver scrap flows falling off particularly at all. And I'm at a loss to tell you why, because I don't know. As you say, silver has crashed in price, and you'd think it would have been as sensitive as gold and would have slowed down comparatively, but not so. Silver scrap flows are still quite good. Down a bit, maybe 10%.
Yeah, I mean, presumably these scrap flows are really from old silver jewellery and so on, rather than industrial flows.
We do get industrial flows, which is probably why it hasn't slowed down quite so much. There are still considerable recoveries from, say, X-ray plates and those kind of origins, and that still comes in irrespective of the silver price. A lot of our customers, perhaps on those kind of materials, would sell us 6 months production forward, so they're all looking at quite a nice price at the moment.
Right.
And they just keep feeding it into us every week or two, a couple of weeks. The hollow ware, that is cups and forks and general silver in usage, that has slowed down a bit, but not drastically, not as drastically as gold. So we're still looking at reasonable flows on the silver. Not as substantial as they were, but nonetheless useful.
Yeah, and there is, of course, another effect one feels. I mean, I remember a few years back when the gold price really broke up strongly above the $1,000 level, that suddenly everybody got into the business of trying to buy scrap, jewelers in every high street and so on.
Yeah, they did.
Yeah, and presumably there was a sort of the initial stage of that acceleration of interest in scrap must have dislodged quite a lot of easy supply, as it were. Do you think that there's an element of it getting more difficult now that people who, let's say, have found the old wedding rings from their grandmothers and so on and so forth and decide they don't need it and sell it? I mean, is that sort of more or less come to an end? And then we're really talking about perhaps it being a bit more sticky on price. I mean, I don't know if I'm expressing myself well, but do you know what I mean? There's got to be initially there has to be a fairly easy hit, and then it presumably does get a bit more sticky.
Yes, that's quite true. I think it was a combination on the way up and a combination on the way down. The combination on the way up was that, of course, the gold price suddenly became remarkably noticeable because it was zooming through the roof. And those people with scrap were being encouraged by a wave of new entrants in the scrap market, advertising everywhere from on television to online, getting cash for your gold was an easy thing. And because of the recession at the same time, people were a bit hard up and did see it as a means of raking in a few £100, which gave the whole thing a thorough boost. But then when it's reached the top and started to fall off, perhaps then you've got a slightly different problem, because now there aren't so many people encouraging you to sell your scrap. So the advertising that was a bit in your face before has now fallen off, and a lot of those, dare I call them, temporary companies will fall by the wayside over the next year or three. If the gold price stays down and there is no further boom. But in terms of the availability of volume, it's pretty sustainable for a long time if the interest can be maintained. But what's happened is that the interest has fallen off because the price has gone down. People will wait till it goes up again. A lot of the people that were advertising boldly won't spend the money now because they're not getting the flows to support it on the advertising front. And so it has fallen off considerably on the volumes, and it probably won't recover unless there's another gold price boom.
Yeah. Changing direction slightly, you also do silver coins, and I should think that you must be one of the main suppliers of sovereigns. How's demand for sovereigns? Is that something that's dropped off since the price dropped, or are people looking to pick up cheap gold?
Well, strangely enough, since the price dropped off, there was a wave of buying. Particularly in the first instance of the first mega crash, the unbelievable, the sudden entrance. I mean, I think that that all of the ETF sell-off was covered by actual purchases of physical gold on a worldwide basis, and it was enormous. And you're now probably, I should suspect, looking at about 500 tons reduction in ETPs in general. Exchange traded products, and most of that has been taken up on a world by gold physical purchases. Yeah. So the physical market is still there with a vengeance.
Yes, and it wasn't just a sort of a one-shot wonder. You know, this is a bargain price. We better go and buy it. And now it sort of seems to have settled at these lower prices. Interest is still continuing, I think you're saying.
Interest is continuing, but not at quite the mad rush when it first dropped. I think it dropped again after that, and that has possibly made people a bit cautious. But there is still good physical interest, particularly in things like sovereigns, as you say.
Yes, that's fascinating. You hopefully will be able to give us some idea as to how demand for physical bars has changed, if at all, in the wake of the price collapse in April.
Yes, when the price collapsed in April, there was a lot of buying, panic buying. We don't normally go in for the half a ton or ton at a time of kilo bars for the Middle East market, particularly, but we were getting orders for delivery over there because nobody else could produce them. All of the main refineries were all producing gold frantically, and they were 3 weeks to a month behind with their orders. There was just this gross worldwide shortage of 4.9s. You couldn't get any 4.9s bars in the market. They'd all been absorbed and cast into smaller bars. Yeah. So we managed to keep up. We got about a couple of weeks behind at one point. Yeah. Very little behind.
Yeah, this is interesting because, with all the demand that this generated, my next question is, where is the supply coming from? Have you any ideas?
Well, above ground supplies are quite enormous. Yes, and they do get released. The scrap flows were still good. They were coming out of the refineries fast. They have slowed now, but then so has the demand. So that hasn't been noticed too much. The answer here is that if we haven't got enough scrap coming in to make up the 4.9s, or indeed 2.95, which is the Middle East market, then we actually take in market bars at whatever level they are, and we re-refine them and make them up to 4.9s. So we have a constant supply. We're unlikely to run out. Let's put it like that.
Right. So you effectively make you effectively go into the market and buy. LBMA delivery bars.
Yes.
Yeah. But I mean, even then, that seems to have been relatively available. And it's what I'm trying to understand is that with so far as we can see, the whole world rushed out on the price drop to go and buy gold. Now, I could imagine that under those circumstances, the price would then bounce to a point where some stability in the market would develop. But no,
it did indeed bounce. Yes, it did indeed bounce, but it was unsustainable as there was still continuing selling of, particularly in the ETF market.
Yeah. But I mean, if you look at the sort of the global demand, I mean, looking at, for example, at the demand that's going through the Shanghai Gold Exchange, I mean, it's been absolutely extraordinarily high level of physical has been delivered through that. It just seems to me that there has to be gold coming from somewhere to satisfy all this demand. It seems sort of, I can't really identify where it came from, except possibly central banks.
That's probably not so likely. But what you've got to bear in mind is that when, technically speaking, when 500 tons of ETPs get sold, that does create a release of gold back into the market. Because a lot of those ETFs are supposed to be, and I say that because I wouldn't like to prove it, are supposed to be backed by physical gold. So when those ETFs get dumped back in the market, those physical bars that are held to support those ETFs do get released back into the market, and these things are held by large vaults where there is an enormous volume of gold, which does come to cushion any sudden rush of demand like that.
Yeah, absolutely.
We had no trouble getting gold during that mad rush.
Right. Oh, that is interesting. Now, as a slightly sort of separate question, we're aware of huge demand in China, and our understanding is that the Chinese government and indeed the Russian government don't let much, if any, of the gold mined in their jurisdiction out onto the major markets. Do you see any bars which are newly minted from Russia or China, or I mean, is there any supply from those sources?
No. Well, we don't see them. Let's put it like that. It may well be that they are out there, but everyone needs to cash it up sometime or another. But I think the situation in China is that the central bank pretty well buys up everything that's mined in China anyway, so it doesn't actually come out of China. With Russia, there are various mines in the area, some of which do sell their gold into the open market. They have export problems, I think. They need government permission, effectively, to get it over the border. And if they're not getting it, then it's going to end up in their central bank, whether they like it or not.
Yes, absolutely.
So I don't think there's been a huge supply from those areas. They're both, if you like, substantial gold-producing areas, but not necessarily. I mean, if China produced, say, 350 tons of gold last year, they would easily absorb that domestically.
Yeah.
So you wouldn't see it coming out much.
No, exactly. Well, Tony, this has been a fascinating insight into an area which we very rarely take a peek at. It is, of course, the stock in trade, if you like, for both you and gold money. And
yes, indeed.
I'm sure our listeners will have found this very interesting. You can be presumably found on the internet. Is it www.goldline.co.uk? Is that the best way to get to you?
That indeed is our website. You can find live prices for everything on there. It's updated every couple of minutes, effectively, probably quicker than that, depending on how active the market is.
Right, or the alternative. Sorry, go on.
The alternative is gold money, of course.
Well, thank you very much. I was just going to say that the alternative is that you can be found by Googling in Baird and Co.
Yes, Baird and Co. or Goldline, it doesn't matter. Yeah. They both come up on Google very, very rapidly. So rapidly, in fact, that other people keep trying to buy our company name as a Google AdWord. It's a bit cheeky.
That sounds. It sounds like you're quite successful, and not only at doing the buying and selling and refining of gold, but also setting up an effective website. Tony, thank you very much indeed for taking time to talk to us.
Absolutely, my pleasure. Thank you.
subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our gold research section.
So, silver scrap flows are still quite good. Down a bit, maybe 10%.
Yeah, I mean, presumably these scrap flows are really from old silver, silver jewellery and so on, rather than industrial flows.
We do get industrial flows, which is probably why it hasn't slowed down quite so much. There are still considerable recoveries from, say, X-ray plates and those kind of origins. And that still comes in irrespective of the silver price. A lot of our customers, perhaps on those kind of materials, would sell us.
The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Alistair McLeod, keeping you up to date with expert opinion on precious metals and the markets.
Hello, this is Alistair McLeod on behalf of Gold Money. And with me on the line from London, I have Tony Baird of the eponymous Baird & Co. Welcome to the podcast, Tony.
Thank you very much.
Now, you do everything really with the physical.
I should think, which is quite a drop.
Yes, that is quite a drop, isn't it? I mean, I don't know what the total scrap flows are in the UK, but I think UK, Europe, and America in 1 year is about 600 tons or so. Is it a fair statement to suggest that scrap flows would have declined not only in the UK but a similar amount in Western Europe and perhaps America? Have you any knowledge of that?
Oh yes. Scrap is very price sensitive, and once the price has gone down, it does slow down everywhere. So it's not just the UK.
You do investment bars, you do jewelry tools, wedding rings, and you buy in scrap and so on and so forth. I mean, how's business been on the scrap side over the last year? Are you finding that scrap supplies are still plentiful, or are they slowing down, or how's that going?
Well, I would say since the gold price has lapsed, the scrap flows have indeed quietened down quite a lot. I mean, we're still getting a fair volume, but I wouldn't say we were getting as much as we were getting at the peak. Possibly, scrap flows are down by about 25 to 30%. That has slowed. It will be, worldwide, really.
Yeah. And is this also true for silver? Because, of course, the silver price is being knocked very, very hard over the last few months.
Well, silver seems like a slightly different animal. We haven't noticed the silver scrap flows falling off particularly at all. And I'm at a loss to tell you why, because I don't know. As you say, silver has crashed in price, and you'd think it would have been as sensitive as gold and would have slowed down comparatively, but not